Good morning, Brew Daily Show. I'm Neal Freyman.
And I'm Toby Howell.
Today, could Meta's fact-checking pivot cost it precious advertising dollars?
Then Midtown Sweet Green restaurants rejoice. JPMorgan has called every one of its 300,000 plus employees back to the office. It's Monday, January 13th. Let's ride.
Kicking things off with an update on the wildfires in Los Angeles, which California Governor Gavin Newsom said would be the costliest disaster in U.S. history. Over the weekend, firefighters took advantage of calmer winds to make some progress battling the blazes, slowing the progress of the Eaton fire near Pasadena and corralling more of the Palisades fire near the coast, about 13% contained as of this morning. The death toll increased to 24 and is expected to rise, authorities said. The weather is not looking good for firefighting earlier this week, with at least 2 heavy blasts of Santa Ana winds expected. But later in the week, the winds are projected to calm down and remain low for the weekend.
Also, if you've been on social media, you've no doubt seen some of the aerial firefighting efforts going on, both from the smaller, nimbler helicopters and the bigger so-called super scooper planes that are swooping in to douse parts of the blaze. Those iconic water bomber planes are actually here on loan from Canada as part of a long-standing agreement between the Canadian and U.S. governments to kind of share aid when fighting wildfires. Right now, there are 2 planes in L.A. being flown by a rotation of 8 Canadian pilots. 2 more are getting folded into the rotation this week, which is good, too, because the FBI is currently investigating an incident where one of the super scoopers hit a civilian drone, damaging it. So hopefully that can get back up in the air soon, because seeing these super scoopers in action, it is pretty remarkable to see just how nimble the pilots can be and how accurate they can be when trying to fight these fires. Now a word from our sponsor, Public.com. Neal, change is hard.
Don't I know it? I've been using the same golf putter for so many years now. There is a dent where I hit the ball.
What if someone offered you up to $10,000 for switching?
Well, that would make change a little easier.
With Public, you can fund your account in 5 minutes or less and earn up to $10,000 when you transfer your old investment portfolio.
Even without the added cash, Public has plenty of other features that make switching a no-brainer. Its AI-powered research assistant Alpha, its broad range of asset classes, and its award-winning customer support team all combine to give you the tools you need to build and manage your wealth.
If you're interested in making the switch to Public, head to public.com/morningbrew. Paid for by Public Investing. Full disclosures in podcast description.
Mark Zuckerberg's makeover of Meta for the Trump era took a surprise and dramatic turn last week when the CEO said his company would end its use of third-party fact-checkers in favor of the crowdsourced community note system employed by Elon Musk's X. Could that cost it business? Potentially. Some marketers are now saying that the change could limit their ad spend on the platform if it were to lead to the unchecked spread of fake news, harmful content, and hate speech. Several advertising bosses told the Financial Times that brands are beginning to reassess their plans to advertise on Meta's platforms over brand safety concerns. For Meta, advertising is not just an important source of revenue, it's the only source of revenue. In the third quarter, advertising accounted for 98% of Meta's total sales of $40 billion. Its 21% share of the U.S. digital ad market is only second to Google. Meta's ability to keep advertising dollars flowing not only keeps the lights on now, but it's also crucial for subsidizing those futuristic money-sucking bets such as the metaverse and AI. So the stakes are enormous. Toby, do you think Zuck's gamble on community notes will lead to an advertiser exodus?
I mean, just look at X to see the answer to that question, because when X has been kind of the opposite of Meta when it comes to brand safety. If you want return on investment, if you want this close relationship with these brands, you don't necessarily look at X as the poster child of that, because with Elon Musk kind of more laissez-faire, this third party without fact checkers to keep the platform pretty buttoned up, you have seen advertisers kind of flee the platform. And Meta has long been seen as not more of a safe haven where you will find more brand safe content to place your ads next to. So even though Meta is kind of copying X's fact checking approach, you do see how it can unsettle advertisers if you do not have some of these safeguards in place. So yeah, there is definitely a little bit of fear out there that Meta could start to turn more into a platform that resembles X.
Now, the rebuttal to this is that Meta's ad tools are second to none, maybe second to Google. But along with Google, it has built this duopoly in digital advertising. It has incredible targeting tools. Brands often see just incredible performance when you place an ad on Meta's platforms like Instagram or Facebook proper. So the pushback to that is if brands continue to see that performance on their money, that ROI, then they're not going to go anywhere. And that really is all they care about. Meta did a full court press to advertisers on LinkedIn and other places saying, look, like we still have these brand safety tools in place. Those are not going anywhere. We want to make sure your ad dollars your advertisements aren't appearing next to harmful content. But still, these quotes given to the Financial Times from ad leaders said, yeah, people are going to start reassessing their advertising spend. So we'll see whether Meta takes a hit. On the other hand, you can say that this story goes in a million different directions, but you could also say that maybe it is a self-defeating move in the advertising space, but it is a plan to future-proof Meta's business in the next administration because there's a huge antitrust trial looming in April, and a lot of these changes that Mark Zuckerberg has been making to Meta are to get in the good graces of the Trump administration. So a lot of moving parts here.
I don't think you will see advertisers care as long as the platform continues to perform. They don't really care what their ads are appearing next to if they are still getting the same ROI that they've been enjoying. So that's probably maybe the cold, hard truth that a lot of these advertising execs did say, like, hey, as long as it still makes sense to put our ad dollars there, we will do that regardless of the new fact-checking strategy. But I do think that last part that you mentioned is very important. Zuck has kind of looked at the playing field here, seen some of the antitrust action that is being levied against big tech and saying, wait a second, whoever's currently in office has a lot of say and usually does end up influencing who or what the antitrust apparatus of the United States ends up operating like. And so trying to cozy up a little bit to the Trump administration might just be a long-term bet on the future of Meta. He's positioning himself. People are calling Zuckerberg a little bit of a chameleon in this sense that he is going where the winds are blowing. So part of it is potentially something that he has to consider when it comes to impacting his business's bottom line, but also he is looking ahead and saying, I need to position myself well for these next 4 years. Workers at America's largest bank are donning their Patagonia vests and lacing up their dress shoes once again as they prepare for the end of the work from home era. Hybrid employees at JPMorgan got hit with a memo last week saying they will be asked to return to in-person work 5 days a week starting in March. Most of the bank's workers were already back clocking in, including senior managers in client-facing roles. This latest move affects mostly back-office roles like call center workers who had still been rocking 2 days a week from home. But so far, the bank's 300,000-plus employees aren't taking it very well. JPMorgan ended up shutting off comments on the internal memo after employees criticized the move, with some even suggesting unionizing. Neal, on the one hand, about 70% of the bank's employees were already back in the office 5 days a week. But also, this is certainly the end of an era.
It is the end of an era, as we like to say a lot. And there are some of these quotes that people were putting on the message boards, I think, are quite revealing. One person said that someone who was driven around by a chauffeur must have made the return to office decision. Another said they were bullish on Rolex prices, as you mentioned. One comment I think that raised a lot of attention was that maybe workers should unionize. Another finally said, this ain't it. So whenever we've seen this over the last few months, Amazon, Starbucks, Dell, AT&T are all large corporations that have said, you know what, this hybrid working experiment that we've implemented since COVID is not working for us for whatever reason. You can read between the lines. Maybe it's quote unquote a soft layoff or something like that, and they're starting to bring workers back to the office. But the thing is, as we've seen from these companies bringing workers back to the office, you need to have your office ready, and that hasn't gone totally well. And I think that's why JPMorgan says we're going to give you a 30-day heads up so we can actually get our stuff in order at our New York offices or wherever they have offices to make sure that we're ready for when you come back in, because that hasn't been always the case. Yeah,
Jamie Dimon, the CEO of JPMorgan, has made it very clear in multiple interviews over the last few years that he is a workplace traditionalist. He does think that face-to-face interpersonal communication and collaboration is the way to run a business. That is really what he's saying here. It's like, we think that the best way to run a company is like this, is in person. That is the rationale behind this. But I do think what you are seeing too is that we are seeing some of a bifurcation in terms of return to office. Is it about productivity, or is it about saving some of the money that these businesses are wasting on these empty desk chairs? I do think that resume.org, they did this survey where they talked to business leaders. 1 in 3 business leaders want workers back in the office due to existing lease agreements. So what is the motivation here? Is it just that Jamie Dimon is looking at all these empty office chairs and going, wow, this is a lot of money I'm wasting. Let's get people back in the office. Or is it really about increasing productivity?
Well, have you seen what they're building in Midtown? They're building a huge skyscraper, 60 stories, 14,000 workers are supposed to fill it. So yeah, maybe there are some considerations there. It also comes at a time, we got this new report out on Friday. 20.4% of office space in the country's top 50 cities were empty. That is a new record for office vacancies. So whatever the return to office mood is, the offices are still more empty than they've ever been in the United States. The U.S. economy said goodbye to 2024 with the most spectacular fireworks display of them all. No offense, Sydney Opera House. According to the monthly jobs report out Friday, employers added 256,000 jobs in December, smashing expectations of 155,000. And for the cherry on top, the unemployment rate fell to 4.1%, which was also better than estimates. All signs point to a healthy labor market. With December's numbers in the books, we now have the ability to do jobs wrapped and look at the hiring picture across the entire year. Bottom line, it was historically good. The U.S. economy created 2.2 million jobs in 2024, more than the 2 million added the year before the pandemic in 2019. Hiring was positive for every month of 2024. In fact, December marked the 48th consecutive month of net job creation, tied for the second longest streak on record. The last time the economy lost jobs was in December 2020. You'd all think this would be cause for a celebration on Wall Street, but no. Stocks had their worst day in weeks Friday after the report came out. Toby, why the discrepancy between the great job numbers and the really bad stock market day?
Unfortunately, this probably puts future Fed rate cuts a little bit more in doubt because of this absolutely amazing report. You called it the greatest fireworks show since Sydney Opera House. It looks like interest rate cuts are probably a little bit more distant. Part of the reason is that if the labor market is so strong, if the economy is humming along so well, do we really need to cut rates going forward? So if you look at some analysts from the biggest banks in the country, Goldman Sachs now expects just 2 rate cuts from the Fed in June and December as opposed to a previously anticipated 3. And then economists at Bank of America actually believe the Fed is done cutting rates. They see a possibility actually that the central bank may be looking at raising rates instead. I'm just saying what Bank of America economists are saying right now. So that is why you saw a little bit of this red day to close out the week, because all of a sudden this possibility that, wait a second, these rate cuts are not as guaranteed as we thought they were because of just how good these jobs numbers were.
And, we do have to talk about the bond market as well. No, that's something that we discussed last week. Bond yields are surging, which indicates that bonds are selling off. The 10-year yield right now is at 4.8%. It's really bumping up against 5%. That 5% yield on the 10-year is very rare. It last happened in 2023, and the time before that was not until 2007. Now, rising bond prices indicate that traders think that there's going to be higher inflation going forward, which means the Fed is not going to cut rates at all. And that puts pressure on stocks because when bond yields are this high, it makes them more attractive relative to stocks, especially tech stocks, especially growth stocks, especially small caps. So if it hits 5%, some analysts are warning of a pretty steep correction in the stock market. So we will be paying attention to what happens with those bond prices. It's not just a U.S. issue either. It's all around the globe. Bond prices are rising, and that's the biggest story going on in financial markets right now.
And then the final thing to keep an eye out for this week is Wednesday. The CPI report comes out. And if that comes in higher than expected, if inflation is a little bit more persistent, a little hotter than expected, that is when you might see the Fed put its already cooling plans for a rate cut completely on ice and just say, hey, we are done going forward because we need to tame inflation. Sorry about your stock portfolio.
I'm putting you on the spot. We're you going to get GTA 6 or a rate cut first?
Oh, gosh. When's GTA 6 supposed to drop?
October.
Okay, I hope we get a rate cut before that. I'm on record, rate cut before GTA 6. Up next, do not go anywhere. We have our winners of the weekend coming right up. Welcome to Winners of the Weekend, the segment where Neal and I picked two stories who had a better weekend than Philadelphia Eagles fans. Since Neal refused to pick anyone other than the Philadelphia Eagles as his winner of the weekend, I'm taking full control of this segment and doing two winners back to back for you all. Plus, I won the pre-show bridge competition, so I was up first anyways. My first winner is cooking up a parlay in seat 14A. Delta recently announced a partnership with the sportsbook DraftKings so you can get your heart rate elevated 10,000 feet in the air. The announcement, which came at CES, was a little light on details, but you can be assured that it won't be anything too crazy, seeing as gambling on commercial flights has been illegal in the U.S. since 1962. More than likely, the partnership will end up being some less flashy in-flight game or Sky Miles sports betting deal. Still, the prospect of actual gambling in the air is tantalizing for an airline the size of Delta. A Department of Transportation study from 1996 found airlines could make more than $1 million per aircraft if they offered gambling, which for Delta would come out to $1.3 billion annually. Neal, given those figures, it's no surprise that there have been some attempts to get gambling into the skies over the years, this one being the latest.
It started in 1981. Singapore Airlines installed think about this, physical slot machines on Boeing 747s. You could actually walk up from your seat. There probably weren't seatbelts or seatbelt signs at the time and go play the slots. That was discontinued, not surprisingly, after people started crowding the back area and the machines started breaking. And over the years, there have been other attempts to put gambling in flights. Ryanair also, currently, that Irish airline does allow scratch-off. They sell scratch-off tickets. So there has been lobbying in the past to the U.S. government to allow gambling on flights. And maybe the Delta DraftKings partnerships, yeah, you said there's not a lot of details, but it's possible that they'll start with this and then maybe cite the study that was done in 1996 and put a little pressure, maybe get its other U.S. airlines on board and say, Trump administration, maybe you want to reconsider putting gambling on board. You can gamble literally anywhere else in most states right now, so why not 30,000 feet up in the air?
I do just want to paint the vision that Ryanair's CEO had. This was all the way back in 2005 that they were saying that potentially we should offer in-flight gambling. The vision was that potentially giving the money that you make off of these games, you could offer people the chance to fly for free, because if you just change the business model to we are now a gambling business, that is where most of our revenue come. We just want people to gamble on board our planes. We don't actually need them to pay for a ticket. So that was the vision floated back in 2005. It hasn't exactly come to fruition because of various laws, but it just paints a different picture of what if your flying was subsidized by gambling in the air. Obviously, there's a lot of other ethical and maybe potentially moral issues you could have with gambling up in the air. But yeah, this is definitely something that you see a headline like Delta Inc.'s partnership with DraftKings, and you start to think, oh my gosh, am I really going to be cooking up parlays while I'm fastening in for a long haul flight? But one
other problem with this is what they call gambling is a mood modifier. And losers, if you are, Toby, actually you're on a winning streak right now, but if you start losing and you are on a plane, you could, not you personally, but some people could throw a temper tantrum. And we know that, in-flight incidents have picked up in the post-COVID era. So just, it adds more pressure to flight attendants and people working on the plane to have someone, have a big swing in moods that are associated with gambling. So if I was pushing against this, I would certainly point to this and be like, we don't need any more sort of variables in the air. Let's just take off and land without any incidents.
Preach, Neal. My second winner of the weekend is Robo Vacuums, because the days of your Roomba rolling over a dirty stock and knocking itself out of commission appear to be over. Two companies, Roborock and Dream, unveiled commercial robot vacuums at CES this year that come with extendable arms that can pick up clutter in its path with grasping pinchers, then deposit them in a bin to clear the way for vacuuming. But Roborock or Dream won't be winning any arm wrestling competitions anytime soon. Roborock's max capacity is 300 grams, which is a little bit more than half a pound, while Dream says its arm can lift up to 500 grams, which means it can pick up something as heavy as a shoe, as long as you're less than a men's size 9. Neal, it's not just robo arms either. Dream's machine has quote-unquote legs that can propel itself up 2 inches in the air. Not exactly stair climbing height yet, but perfect for small elevation changes between rooms. But the main takeaway here, Neal, is that these robot vacuum cleaners are evolving into almost full-on little butlers.
They are, and this was introduced at CES last week in Las Vegas. There was thousands, maybe tens of thousands of products unveiled. The robo vacuums were the talk of the town. CNET's editors, which looked at all of these products, ranked the Roborock one as unanimously the Best of CES award. It's the first mass market robot vacuum with a mechanical arm that can pick up socks. And this had been, a huge sticking point for robot vacuums, that they would get caught in socks and other places around your room and just not, or avoid them and not clean those parts. So the fact that they can pick up debris in the way and, place it in a designated spot. That's one of the capabilities as well. It seems to, we laugh, but it's a pretty big innovation in the space and could lead to more adoption.
And then another innovation that got people talking was Samsung released this AI robot vacuum cleaner that can actually detect intruders if it sees suspicious activity during the time that it's out puttering around cleaning
your little Macaulay Culkin.
Yeah, your house. It will send you a push notification, but it also kind of conjured up these odd dreams of if these robots can eventually start climbing stairs, can see the environment around it. What if you wake up in the middle of the night and the robot has climbed into your room and is looking at you? So it did open up a little bit of dystopian ideals here, but I do think that as the smarter you can make these robots, the more hurdles you can get them to overcome, the more effective that they actually are. The home is this very complex, this very dynamic environment for a robot to operate in. So seeing these innovations, it did get a lot of people fired up. And I've always wanted I had a Roomba vacuum cleaner right when they first came out, but they would just always end up under the couch or end up getting caught in the curtain like that. So the better that they can untangle themselves, the better that these products are going to be.
As per Monday tradition, let's close out the show with a preview of the events you should know about this upcoming week. It could be the final week that TikTok exists as a functioning app in the United States. On Friday, the government and TikTok battled it out in front of the Supreme Court, and the justices indicated they were more sympathetic to the government's case that TikTok presents a national security threat, which overrides free speech concerns. In other words, it appears they won't overturn a ban. SCOTUS is going to speedrun a decision since the ban would go into effect on Sunday, so expect a final ruling on TikTok's fate later this week.
I'm getting my last scrolls in. I think I might just delete it today to rip the Band-Aid off, because it will just be a long, slow. Remember, they're not going to delete it off of your phone. What will happen is that they won't be able to ship updates anymore, so the app will just continue to get more buggy, more laggy. So might as well just rip the Band-Aid off now and delete it while you still, have the chance.
Yeah, this is an absolute huge story and will affect the social media information landscape, so we'll definitely talk about it more later this week. Confirmation hearings begin for Trump's cabinet picks, so get ready for some fireworks on Capitol Hill. On Tuesday, former Fox News host Pete Hegseth will go in front of his Senate committee to make his pitch to lead Department of Defense. Pam Bondi, the former Attorney General of Florida, is up on Wednesday for AG of the United States. And on Thursday, billionaire hedge fund manager Scott Bessent will make his case for Treasury Secretary. C-SPAN is going to have its highest ratings in years.
This was a little trip down memory lane for us, too, because we spoke about when all of these people were nominated. Now we'll see if the confirmation process goes a little bit more smoothly than maybe the nomination process.
And I should say, defeat of a nominee by a vote in the Senate is virtually unheard of. The last time it happened was in 1989 during the incoming presidency of George H.W. Bush. So you basically do all this vetting beforehand, and you hope to sail through the Senate, which is now controlled by Republicans after the election they were sworn in earlier this year. Speaking of TV, the highly anticipated second season of Apple's Severance is out on Friday, 3 years after its debut season. Everyone must watch this now. It's an incredible show, and the second season has received glowing reviews. Over in movies, Oscar nominations were originally scheduled for Friday, but that's been pushed to Sunday due to the wildfires in Los Angeles.
Neal, you have been telling me to watch Severance nearly every single day over the past week, so I think I just got to rip the Band-Aid off and do it. It looks incredible.
Also disrupted by the fires is playoff football. The wild card game between the Vikings and Rams has been moved from LA to Arizona tonight. Other winners from the weekend's playoff action were the Texans, Ravens, Eagles, and Commanders.
Congratulations to your Eagles once more.
Thank you, Toby. Let's wrap it up there. Thanks for starting your morning with us and have a productive start to the week. Almost as productive as A.J. Brown on the sidelines reading a book. For any questions, comments, or feedback, send an email to morningbrew.daily@morningbrew.com. And we'd be so grateful if you shared the podcast with your friends or family. Don't wait. Just drop a link in the group chat as soon as this episode ends in 30 seconds. If they already listened, Toby's got another sharing idea for you.
I want you to share the podcast with someone who is already tired of winter. Just stay strong. A few more dark and cold days to go. And then we hit some slightly less dark and slightly less cold days. You got this.
A few more as in 2 months, 3 months. Let's scroll the credits. Emily Milliron is our executive producer. Raymond Liu is our producer. Olivia Graham is our associate producer. Uchenna Ogu is our technical director. Billy Menino is on audio. Hair and Makeup just lost their life savings from the middle seat. Devin Emery is our chief content officer. And our show is a production of Morning Brew.
Great show today, Neal. Let's run it back tomorrow.